Today's financial spotlight focuses on a major development from Wall Street. Lazard, one of the world's premier investment banks, has just released its first quarter earnings report for 2025, according to Reuters. Lazard posted profits that exceeded analysts' expectations, largely driven by better-than-expected performance in its asset management division. This indicates that, even in a world full of economic uncertainties, global investors continue to place their trust and their money with trusted financial institutions like Lazard. But beneath the headline numbers, there's a story that warrants deeper attention. Lazard's CEO, Kenneth Jacobs, issued a stark warning. The global mergers and acquisitions market, commonly known as M&A, is facing significant headwinds. What's causing this slowdown? First, persistently high interest rates have made financing major acquisitions much more expensive. Corporate leaders are being forced to think twice before committing billions of dollars to new deals. Second, economic uncertainty, amplified by rising US-China trade tensions, is pushing many CEOs and boards of directors into a more cautious defensive posture. When uncertainty rises, bold strategies give way to wait-and-see tactics. In addition, regulatory scrutiny has intensified. Antitrust regulators in the United States, Europe, and China are applying stricter standards to proposed mergers, making it harder to close large deals. Fresh data shows that the total value of global M&A transactions in Q1 2025 fell by a staggering 28% compared to the same period last year, the sharpest quarterly decline in the past 5 years. This creates a major concern for Lazard and the broader financial industry. M&A advisory services, long a pillar of Lazard. Revenue could come under increasing pressure if deal activity continues to slow through the remainder of the year. In response, Lazard is adjusting its strategy. The firm is now focusing more heavily on advising mid-sized companies, rather than relying solely on billion-dollar mega deals. But the implications extend far beyond Lazard's earnings. When M&A slows down, investment into innovation, expansion, and cross-border collaboration also weakens. Many struggling firms that would have benefited from mergers or strategic partnerships may find themselves with fewer options. In the longer term, this could sap dynamism from the global economy, slowing the post-pandemic recovery and undermining the competitive landscape across industries. Looking ahead, two key factors will determine whether M&A activity can rebound. First, the future path of monetary policy. If the Federal Reserve and other central banks can ease borrowing costs later this year, it could reignite deal-making appetite. A reduction in geopolitical risks, especially trade tensions, would be essential to restoring corporate confidence. Until then, financial advisors, investors, and corporate leaders alike must navigate a tougher, more complex landscape, where caution, agility, and resilience are more important than ever. If you found this update informative, we warmly invite you to subscribe to the channel, like the video, and share it to support EconoRadar's continued growth. Thank you very much for watching, and we look forward to seeing you again in our next report.